So excited to do the housing update for August of 2022 and excited that Steve Cartwright from AmeriFirst is my guest today. How are you, Steve?
I'm doing great, Mary. Thanks so much for having us over today.
Well, our pleasure. We're going to jump right into it and see what's happening this month in housing. And what's interesting, Steve, to me is the fact that experts now have not just lowered, which you'd hear or think, their forecast for 2022. They're actually raising them. Is that blowing you away on prices?
It is, Mary. I really didn't know what to expect, but when I saw these new numbers, every expert in the country thinks that we're appreciating still.
Yeah, exactly. And if you look at it, some of them are double, like Fannie Mae and Freddie Mac. But, MBA seems to have downgraded the whole home price forecast. So, you do get a mixed bag, but that is improved as you look at that second column from what they thought in January of 2022, which is amazing to me.
I think it's amazing, too. It really says a lot. Across the board, almost every expert thinks that appreciation is going to end on a high note. And I think we're seeing that today.
Absolutely. So, we've got always some quotes. So let's see what we have here with Mark Zandi. Go ahead and read that, Steve.
I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. And I think that's really powerful, and I think it's true from what we're seeing here.
Absolutely. And, it's interesting in some of the markets we're seeing, they were appreciating so much, and now they're coming back down to a level where they should be because we've overarched where the price of the market was, quite honestly.
Absolutely. I think what we're seeing now, we're not seeing a depreciating market at all.
Zero.
What we're seeing is an appreciating market, but much more normal.
Yeah, exactly. So let's go ahead and see what Black Knight says. Go ahead and read that.
Annual home price growth dropped by nearly 2 percentage points, the greatest single month slowdown on record since at least the early 1970s.
That sounds scary.
It does sound a little scary.
Yeah.
But I think we need to put this in context this is a single month, Mary. It's not a year. Yeah. Year over year, we still are much higher.
Right.
It just shows that maybe we've crested. We're not appreciating as rapidly, and we're appreciating at a much more normal level.
Well, they go on to say, go ahead and read that.
While the slowdown was record-breaking, home price growth would need to decelerate at this pace for 6 more months to drive annual depreciation back to 5%, a rate more in line with long-run averages.
Right? Says it all. So yes, if you read those terrifying news headlines, because they're meant to terrify, not clarify, you're going to see, oh my gosh, it's come down. What's happening? This is the slowest ever since the 70s. But really, we're way above what you just said. We showed what they put their forecasts up to. So when you actually go in and look at an average, look, 10.3% average of all 7 forecasters is pretty darn good.
That's phenomenal, Mary. And I think you do need to consider the average from everyone. They all have their own intel. None of them are going to be exactly right, unless it's on accident. But if you look at that 10.3% average, this is a no-lose situation. You need to buy a house now if you're in the market.
If you're in the market, buy a house now. So go ahead and see about inventory. There's the other thing the news comes out with. Oh my gosh, there's so much inventory out there. Well, yeah, we do have 30% more nationwide than we did last year, same week. This was in July, I think, as of August 12th. But look at what happened. We are lower than 2020 and a lot lower than actually in 19.
Mary, when I see this slide, I see good news.
Yeah.
Do you know why?
Why? Tell me.
Because last year, sometimes you had to make a decision on a house in 30 seconds if you were even going to offer. Now, you may have a few hours.
Yeah.
And while the numbers are up for inventory, they are still way, way, way lower than we need.
Well, without a doubt, we have not enough inventory, which we're going to share with you in a minute. Now, let's talk about affordability, because we just hit on price, but also affordability includes interest rates, your expertise, and wages. So what are they having to say? Because I think this affordability chart that you're going to show next is a little bit scary.
It is a little scary. So we're over in the red right now, Mary, as you can see. But once again, we have to put this in perspective, and we have to have some context here. 98.5% of the people can still own a home. Affordability has been affected by interest rates, by price, and even property taxes, and even in some occasions, homeowners insurance. However, I think we're still in great shape when it comes to affordability, and there still is some products out there that can really help a consumer with affordability as well, Mary.
You know, this is a great place to talk about that a little bit as we go into these next set of slides, because you mentioned something very interesting. There are products right now that can help with the affordability. You know, I know you guys have several, but let's hit the next slide with that, what National Association of Realtors is saying.
So compared to 1 year ago, the monthly mortgage payment rose to $1,944 from $1,265, an increase of 53%.
Scary.
It is scary. Again, we're looking at a scary number right there. But I think you'll find that rent has increased as much or more as well.
Yes.
And that's something to keep an idea on as well. So we really need to think about all these things in the grand scheme of things.
You know, I like how you said that, because if you show the next slide, it really talks about home ownership, monthly mortgage payments back from April 2020 to, $1,944 in today's market. But that's assuming what? 20% down, conventional, none of these other products. Talk a little bit about some of those.
So there are products out there that can possibly get you an interest rate from 4 or 5 months ago, Mary. There are ways that we can finance a loan now and maybe have the seller pay a portion of that towards discount points and get you an interest rate maybe that hasn't been seen since March, and that can really help the affordability chart. Keep in mind that all these are averages. The average interest rate has risen quite a bit from a year ago in the last 4 or 5 months.
Yep.
There are ways to combat that, though.
I love that. The next slide itself talks about mortgage payment to income ratio since 2000 to today. And you can say more than anybody, Steve, you guys are looking at 25% of expense coming from your mortgage to get approval. Is that correct?
That is correct. It has risen some in the last year, but there's a bunch of different reasons for that. Price of home, interest rate, and property taxes again. However, what I'll tell you is 25.4% is still relatively low. And again, once you compare that with rent, this is an investment. Keep in mind that part of that payment every month is going in your own bank account as equity in a home.
Yeah, that appreciation train is significant, let's face it. I don't know, when I bought a home, I thought it was closer to 33%. Has that come down? Has that debt to income ratio come down?
It has come down.
Okay.
I believe that you'll find that mortgage payments are probably more affordable than they ever have been currently.
Yeah, it's crazy. And who can qualify for these? If you hit the next slide, we are here in the South, right? The median income is in blue, and the qualifying income is in the second column. So, I would say, and I'm always confused, I think the red is bad. That in order to qualify, you'd need it to be like in the Midwest. But I don't know, here in the South, we're about even, which is awesome.
We're about even here. We're a little bit higher for your qualifying income, which is a good thing. Nationally, our qualifying income is a little bit higher than the median income, which is good as well. So I think there's a lot of positive news on this. It looks like the Midwest is lagging behind, as is the Northeast a little bit, But luckily here in the South, Mary, we're still in good shape.
We're in great shape. So, let's hear what some of our other analysts are saying as we move forward in these slides. So what is Ali Wolf saying?
We are in a place where strategy discussions and planning are critically important to make sure we can thrive during these challenging times. Stay nimble, stay informed, and remember, housing is traditionally one of the first sectors to slow as the economy shifts, but is also one of the first to rebound.
And that's the case here in our a lot of our second home market. Let's just face it. We here in Southwest Florida, we have a lot of primary market in our northern markets, and then they're kind of a mix in the middle market, and in the South, we're primarily second home. So what we see is not only that with the traditionally one of the first sectors, but in a second home, you're even ahead of the curve there. So we started to see that slow down in April, and we feel that when we come in through this season, we're going to be one of the first to recover. I wish I had a crystal ball, but it sure feels that way. At the end of the day, prices aren't really coming down. So what does it matter? What long term, if you want to buy a house, it's, and you want to have that toes in the sand or the boat in the backyard, now's the time to do it.
There's no better time to do it.
Right.
Every appreciation model that I've seen from anywhere shows that we're going to appreciate over the next 5, 10, 15, 20 years. Every year, probably at the very least, even if the economy does terrible at 4%, Mary, it makes sense by now. I think this is a very, very, very true slide.
Yep.
People hear the fear, they hear the news, they're concerned about it, so they instantly stop.
Yeah.
I think people are starting to realize right now, especially with the inventory ticking up, so they have hope that they might be able to find a nice place. They're going to start joining back in anytime. And I think they are somewhat.
Yes. We've had a slower summer, but let's look at what's happening in our area as we move forward. Go ahead into that next slide. Steve, we've been talking about this all summer. If you look at the price points that are pending in that month, so we're in August right now, between August 1st and the 28th, this has been all summer long, which is normal, let's face it, because in a primary market, they're going to be priced less than the secondary market. 58% or 52% is between $250,000 and less than $500,000. That is what's pending right now. Now, if we move forward and the next price point is like 28%, $500,000 to $1 million, that covers a lot of range. Those are like almost more than 75%. Our super luxury prices have come way down, unfortunately. Anything $3 million and above, and I didn't even have enough data in there because there were only 34 of them to categorize them between 3 and 5 and 5 and 10 and blah, blah, blah. So it's like 1.3% and under. So my take on this is properties are still moving. Price point is mattering right now. But as we start to move into the winter months, those will shift.
I think you're right, Mary. Yeah. I think, the blue bar right there indicates what's happened the last 2 to 3 months. We've all seen that.
Yep.
The real estate agents have, the lenders have. We've seen that across the board. I think the next couple of months, you need to really keep your eye on the next 2 to the right.
Yep.
I think they're going to increase, and that 1.299 I think is probably going to increase the most. That's my opinion.
Yeah, for sure. So let's talk about the next level of those stats. Now, this one is 2022 month over month. So the data I had was July over June. New listings are up by about 5.1%. Again, this is the entire MLS. So it goes from Marco Island up to Alva, Fort Myers, Cape Coral, et cetera, and everywhere in between. New listings are up by 5.1%. But homes for sale are down by 15.1%. So I have a net delta of about 10% down in the last 2 months. Average close price is down also by 7.3%. But again, that would make sense because if our second home market is way priced higher and we don't have those prices between June and July because our second home market isn't buying, then that would make sense. So if you look at the next slide, which is interesting, Steve, and homes for sale, oh my gosh, I feel like I'm in the Home Alone. 62.7% increase in homes for sale. Now, I'm going to show you that slide again. 30% or across the nation. Our new listings are down, but look at our average price. Close price is up for the year across the entire MLS. So we're kind of like in perspective with what was happening. If you go to one more slide down, this one, remember, nationwide, year over year, over 30% increase from a year ago. We're at 62.7% increase over a year ago. Makes sense. Totally makes sense. So I don't know, Steve, I guess we close with, is it time to move?
I think it's time to move, and I think it's time to buy. When I look at these numbers, Mary, some people may look at them and feel a little negative. I actually look at them and think it's a really positive thing.
Yeah.
I know if I were looking for a home right now, I would be extremely encouraged, because I do think that I'd have a much better chance of finding what I wanted right now than I did a year ago.
For sure. When you look at this slide, yes, there is more inventory now, which is exactly what you're talking about. So, Steve, as we wrap up August, I thank you, as always, for coming in and joining us on our housing update. And until next month, we look forward to seeing you here in Paradise, whether you're buying or selling, and we'll always give you the straight talk.